Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Monday morning edition of Benzinga's Pre-Market Prep. I'm Spencer Israel. As always, I'm here with Joel Elconin and Dennis Dick. Hope everybody had a good weekend. We're back with you folks for another day of market action. We have earnings, of course, Halliburton, T-Mobile, STX, HAS, all reporting. A crazy week it'll be in earnings land, so I gather that'll be the most of what we talk about. Also, GE getting a couple of downgrades today, following through from our discussions last week, so we'll talk about that. Our guest today will be Sean Udall. He is the CIO of Sean is the tech stock strategist, is what I meant to say. Their quantum trading strategies is Sean's firm. Joel, what's going on today?
S&P futures are in the green. No shock here. Pre-market high 77 and a quarter. That's a new all-time high. Pre-market low 72 even. And if you guys and gals have been noticing, we have not been taking out that pre-market low, finding support just above it and rallying. But anyways, if we need a target on the downside, we'll use that pre-market low of 72 even. Gold and silver both in the red. Crude up 18 cents here at 52.02, back over $52. We know got a lot of resistance up just under $53. So let's bring in our Buffalo Bills fan here. Dennis, how you doing?
Everybody knows your business when you're on this Facebook. I didn't even do anything or post anything, and everybody knows where I am. How does this work, Spencer? You have to enlighten me. So I'm on Facebook. I don't post anything on Facebook or usually ever, but somebody tagged me. Yep. And then everybody's like knows just because I got tagged by a friend that I was at the Bills game. Everybody knows. How does everybody just know just because somebody tagged me? Explain to me how this works.
I don't know. But I
don't know. You know.
But both myself and Joel saw you independently.
No, I didn't.
Okay. No, I think my theory is that the less you post, the more prominently each post is displayed in the algorithm.
Anything.
No. Okay, I should say the less active you are on Facebook, then the more prominently each activity is displayed. So you didn't post anything, but you were active because someone made you act. Someone did something.
So the key is not to be active on Facebook?
If you wait,
I'm never active on Facebook.
Yeah, you're saying that if you're not active,
I don't pretend to. I don't understand the algorithm any more than you do. Okay, I don't know, but I just think it's funny that your post was you didn't do anything, but you were prominently displayed on my Facebook. I don't know why.
It's like, holy cow, Dennis Dick, he's alive. I haven't heard from this guy in years.
Yes, that's it.
My question is like, how many people came up to you and said, "Are you Dennis Dick of Benzinga's Pre-Market Prep Show?"
Oh yes, of course. I was signing autographs left and right.
Uh-huh.
Yeah. So yeah, I went to the Bills game. It was a good game. I mean, I thought the Bucs actually had it at the end. 2 minutes left, and it was a tied game, and the Bucs had the ball, and then the turnover on the 20. Don't turn over on your own 20 with 2 minutes left in a football game, as you're in a whole world of hurt. So it's nice to see the home team win. I had a lot of Bills fans there. One of my buddies actually flew in from all the way from Calgary there to come in for the game. And we had a good group of us. 7 of us went out to the game there in Buffalo. And that's the first time I've been there. Nice stadium.
All right. So we got a lot to talk about today. We want to do a little revisionist history and take a look at that day in GE before we move on to the new stuff?
So. I think so. And the reason here is GE, a lot of analyst action. Analysts chasing price, obviously, this morning. We know GE reported. You got to like that tape. I mean, if you actually are long, which I am in my investment portfolio, I'm not saying that the stock is out of the woods by any means, because I still think there's a dividend cut looming, and I still think the stock could end up being a hell of a lot lower here yet. Again, talking against my book, because I've had this for 17 years. But that tape on Friday is a nice tape for GE if you are trying to make a bull case, because that was an absolutely terrible report. Stock opened up near the lows, and something that you said to me, intraday, Joel, on Friday. What did you say?
I just said, hey, was that the capitulation low?
Yeah,
I mean, everybody out that wanted out.
I think so. I didn't capitulate, so I did not sell the low, even though I thought about it. So 22, yeah, it opened up near the lows and then started rallied a buck basically right in the first 10 minutes. So that is just basically everybody washing out at the low, at the open, and then people coming in saying, hey, you know, this is maybe starting to get overdone. You squeeze the shorts a little bit. You probably have some people saying, look, this is a terrible report. Things going to $20. And, you know, some shorts maybe that get hit and put it on early in the morning, getting squeezed there a bit too. And it kept rallying and it actually closed green. So that is was that a full red dog reversal?
Oh, by far. Yeah. The thing that kind of caught me off guard here was they traded down to 21.47 in the pre-market, right? So you're thinking, man, this could trade under 22 today, you know, just because it did get a pop right before the open. Thing is, you got a 22.14 open, you got a 22.10 print, and all those bids at 22 and under 22 were just, they weren't there. I mean, they were there, but they just never got to them. So there was, you know, you were looking for maybe another 50 center, test that pre-market low, but that was just too much. I mean, it traded a lot of volume, but someone.
What was the volume on Friday?
I think it was 192,404,000. It's got to be. Yeah.
That's unbelievable volume.
Yeah.
Wow.
Yeah, 100. Yeah, that's a big day. And, you know, you talk about big volume days, reversals. Moving forward here, I know we got some. Do you want to go over the upgrades and downgrades? Or
yeah, so we have three analysts prominently making calls here this morning. We got GE actually upgrading the stock to a buy. Bank of America, or no, yeah, Bank
GE
America
upgraded themselves?
Bank of America upgrading GE to a buy, putting a price target of $27. Then you've got Morgan Stanley downgrading it to an underperform, putting a price target of 22. That's a total chasing call there. I mean, the Bank of America is, you know, a gutsy call because they're coming out there and they're going contrarian here. UBS downgrading it to neutral. So I get two analysts chasing price and another one upgrading the stock this morning. I give more weight to the one that's upgrading the stock because you knew there was going to be a couple analysts that are going to chase price. Market this morning is not doing that, though. Market is giving more weight just to the downgrades here because the stock's trading down 1.3% in the pre-market. I'm kind of interested in this on a pullback here, Joel, and I've actually been nibbling a little bit here this morning just for a trade because I think this stock, I think it could actually have some buyers come in here again today. So I'm just nibbling here. Not building a full position here yet, but nibbling a little bit in the pre-market because I think there could be some follow through here today. I think you said it could see settlement. I think it could see settlement too. Settlement being up at 23.83. So down 1.3% today. I'm a little bit of a buyer on the pullback just for a trade though.
Okay. A couple things here, and actually, you know, I had Wayne put this in the article that we did on. I think we did it on GE. Look at your close on Friday, 23.58, right? So you had the bad report. You closed at 23.83. I mean, that's a very important zone. You know where people were thinking before the report, 23.58 close, and then after all that volume and information, you closed at 23.83, which was up on the day. So I think the street's going to decide, you know, whether or not if this thing gets back. Yeah, big day for it. Gets over, that high, closes above 24, then I think you have a pattern. But if not, I'd be a little, you know, if you can't at least clear that Friday's high and close, which are right by each other, then I think you might have some more work to do on the downside. But here's going to be a downside battle, right? Because you had a 22.10 low, right? So if you missed the low. I mean, you might have missed the low of the move here. And if it goes back down there, it's going to be a fight. It's going to be a fight. It's going to be a struggle. There's going to be bids. There's a big short interest. I don't know what the shorts did on Friday. We'd have to check that. But are you going to get any better opportunity to cover a short than GE than an opening, down $1.50 off an earnings report? So a lot to follow here, keeping an eye on that double close area, but we'll use Friday's close. 23.83 is the most important number.
I mean, the short thesis still for the stock, which is, a scary thesis for longs, and I'm scared of it too, is the dividend cut. That is still the short thesis. I did not prominently say that they were going to, keep the dividend. They just said, it was a priority and they're going to try to keep the dividend, basically, is what they were implying. So we don't know yet. 4.09%. If they cut the dividend, the thing's in trouble, I think. So they didn't cut the dividend on Friday. That was the good news, but the quarter was an absolute disaster. So, it's nice to see it rally on bad news because it was bad news on Friday. So you see a stock rallying on bad news, telling you that it's a little bit overdone, at least in the short term. That being said, overhead supply in this like crazy too, Joel. I mean, this thing gets up in the 24s and 25s. Like 25 is gonna be like a brick wall up there, and you get up high enough, you might even have people like me saying, okay, enough is enough. I've been in 17 years, haven't made money. I'm going to cut some of these losses. The stocks bounce back from those lows. So, there's going to be some overhead supply as well. So it's going to be a big battle between the bulls and the bears here. I think you're going to still see a lot of volatility today in GE.
Yeah. And just a final note, it's really hard to find a good level because during the flash crash, you went down under $20, 1937. So that was like an artificial low, right? It was on that open. So just using, and I think I said this on Friday too, using the half and the whole numbers. Problem was 22 was the nice round number. You just never got to look at it because there's a lot of bids there already.
John Dodson in the chat is saying he thinks that they cut the dividend, the stock could actually go higher. There's an argument to be made there. Maybe the market just wants, that comfort of knowing, okay, maybe we're only going to cut it a little bit. They're not going to eliminate it. So there is some unknowns there. And it's not a guarantee, I guess. I guess you're right, John. It's not a guarantee if they cut the dividend, the stock's going lower. But I won't be happy. I've been in 17 years. They cut the dividend. I'm not going to be happy about it. So I might even be a seller. But it's a good point. It's not necessary, that they keep the dividend for the stock to outperform here. Maybe that's what the market wants. But I think the market still wants us to keep the dividend.
All right. Other earnings this morning.
A lot of earnings here, and we're going to have a busy earnings week here. But let's jump into some of the big ones from this morning. Let's go to Hasbro, the toy maker here. It's trading down $3.50 in the pre-market there, and Hasbro actually was trading down a little bit Friday night ahead of it. I think this is just a stock that's, really when you put it in perspective, it's very much outperformed Mattel. I mean, if you go out to a 5-year chart here, Mattel in 2013 was $45. Mattel is now $15. Hasbro, and this is completely the other way, was $40 and it's now $98. So I don't know how they figured out, but they have just eaten Mattel's lunch and taken over. Mattel's been a disaster, and Hasbro's been a very good performer. So even though you say, and I've always said, the stock hasn't really performed well in this last quarter, being down from $115, it's still done very well when some of these other toy makers have struggled. So that being said, Spencer, what were the numbers from Hasbro?
Hasbro reporting Q3 EPS $2.09 versus $1.94. Nice beat there. Sales of $1.79 versus $1.78 billion. So a slight beat on the sales and a pretty good beat on the EPS.
Say anything with guidance?
I have not seen anything with regards to guidance yet.
Anyway, stock is down, so it's not good enough here. Again, this has been the theme. If you're not blowing it away, some of the laggards have been okay. We've seen, stocks that don't blow it away, but if they've been lagging, they're doing okay. You can say, like I said, this has been lagging the last quarter, but really when you put it in perspective over the last few years, it's been an outperformer. So it's not good enough. That's not, the bottom line here. I'm not sure if anything was said on guidance yet or not. Usually they do eventually say, but we just got the report a little bit ago there, and sometimes guidance comes later. Stock is down 3.5% in the pre-market. Joel, give us some levels.
Just give me bid offer here right now.
It's wide. Very wide, 93.50 to 95.99. You're 2.5 points wide here this morning.
Wow. Only
Only traded 9,000 shares, and some of those shares were actually traded. Most of them are just actually some crosses there at 97.5. So this is very light volume here this morning. So people are still trying to figure out whether they, really hate it or they only hate it a little bit.
Yeah, 94.44. That was your last trade here. And what am I getting? I got at 93.66 on this platform here, Dennis.
Well, it's an odd lot at 93.66. There was an odd lot at 95.50. Those are the last two trades.
Odd lot Hanover.
So you had 20 shares trade at 95.50 and another 15 shares at 93.66. Like, that's pretty much meaningless when you see these odd lots trading. And there's been no serious volume. That's why it's 2.5 points wide. People, don't know where this is going. Full price discovery process happening here in Hasbro's one, and trying to digest this information. It might not digest it all until we get the open.
I don't see anything in here, Dennis, until 91.57. That was your September 8th low. That's still a couple bucks away from here. A lot of times, when you get the momentum going to the downside, you might have some sell stops. But right now, besides whatever the pre-market low is, like at 9:29 and 59.5 seconds, that's a level. And then boom, 91.57, your September 8th low. If I was short and if I had a big position, I would just try and I would see if it could get down there under $92 and then just start lifting offers. Right now, just nothing pretty about the chart at all, just trading at the lows of the pre-market session.
Okay, and then we got Seagate earnings, and this reminds me of IBM. I have not seen the report yet or read the report, but Spencer's going to give us those numbers in just a second. But I'll just say this is a stock that has really underperformed the tech sector. Tech stocks have been hot, and you look at this, and a lot of people pair this up with Western Digital. Western Digital has just been destroying Seagate. So here's an example of a stock that has been not loved at all by the street. So if they reported anything that was okay, or guidance okay, it was going to pop. And I haven't seen the numbers yet, but I'd imagine they, it's up 7.5%. But I'd imagine they didn't even, if they did blow it away, great. But even if they didn't blow it away, I'm not surprised it's up.
96 cents versus 85 cents, so an 11
Well, that's a blowout.
11 cent beat. Sales of 2.63 billion versus 2.52. So yeah.
They blew it away pretty good here. So not surprised that stock's up 7.3%. It's been on my radar to buy this one, Joel. I know it was on your radar too. When I had a 7% dividend, was down to 32.33. We talked about it, and we both thought about putting this in our investment portfolio. I did not. Did you play it at all?
No, I almost was gonna swap out the Western Digital, for the Seagate for the Western Digital.
Man, that would have been a good swap.
I know that would have but I was thinking, man, you're getting too cute on that. You can't play it that way.
The dog and selling the leader.
Yeah, which is not the best strategy ever. But I have to agree with you on this one. I don't think I'd be shorting it. I think I'd wait to maybe that $40 area. You got to you got a gap fill 39.76. That was a really, really, really bad day. Well, actually, it was a close on that day. So you can fill a gap up to 39.23. The close on that terrible day on July 24th closed 39.76, a high of 40.13. So yeah, it's still a couple bucks away from there, but this thing may see $40 today.
I think this could be the gap and go too. And I'm just taking the lead from IBM here. Obviously, stocks not much to do with each other, but it was a tech stock that has been hated. It reported a pretty good quarter, and they've been buying it ever since. And I think Seagate could just follow that lead. So I would not be surprised if this stock actually filled the gap today too. And the gap we're talking about is back on the July 24th and the 25th they reported, and went from $39 down to 31 that day. So there's a gap in the chart all the way up to 39.23. And I think you're only a buck and a half away from there. I think you can fill the gap here too. So I'm a buyer of Seagate on pullbacks for trades.
Yeah, I don't know when you'll see it down in yesterday's range or whatever, but just like the IBM. I think that's a great example, Dennis. I couldn't agree with you more. I'm buying the 40 calls. The 40. Do they have just Monday calls? Can I just buy Monday calls? No, look at the Beamer 160.
We need daily calls. They got weeklies. Why don't they come out? They know that's coming. They're going to come with daily calls. Yeah. All those day traders get to write their calls and puts. Be active. Yeah. I do some daily. I trade some daily calls.
That's just kind of like trading the stock, though, isn't it?
Yeah, no, pretty much. Well, you got an option for the rest of the day.
All right. Just pulling up Beamer here. Woohoo. Look at this 162 level. Are we trading up in the pre-market before I say
I'm long it right now as a trade.
Oh.
So my comments. Yeah, just follow through. Riding the train, it's been moving up. But this is actually starting to get a little bit lofty here now.
Yeah, but look at this 162 level. You had the bad earnings report. You had a high at 62.64. You're getting there right now. And then you got air up to the report and a gap to fill up to 172 and change. Actually, the low that day was 169.83. So nice. Look at getting in a nice area there for IBM.
Other stocks, VF Corp reported here this morning too, and that stock's trading up a couple bucks. So these retailers have actually not been doing that bad. It's funny. You have some retailers that are just struggling, and then this one here, VF Corp, I guess they actually make the close. The ones that have been making the close aren't doing that bad. Really, when you put it in perspective, the stock's only 8 points off its all-time high. Pretty impressive in an environment where they have just been massacring retail stocks. So give us numbers, VF Corp, and we'll break it down.
$1.32 versus $1.12 on the Q3 EPS. Sales of 3.48 versus $3.39 billion. So beat on both. They're also raising their guidance, their fiscal year EPS from $3.01 to $3. Well, actually, no, it's $3.01. $2.98 was the estimate for the fiscal year EPS. They're raising their fiscal year sales guidance as well by a hair. So.
And the stock is trading up $2.50 in the pre-market, Joel. So a nice lift here for VFC. I'm going to go to the book. Give us some levels. I'm going to go check out the book and see if there's anything kicking around.
All right, VF Corp. Do you know what they make or what
their brands are?
Yeah, I know.
They have a lot of brands.
Okay.
We go grab that. Me and Spencer go hunt that down the back and give us some levels. Me and Spencer will race to see the brands.
Okay. All right. VFC for you who are watching this home on your computers. Wow. What a breakout above the 65.5 area. You had 3 monthly highs back there during the summer doldrums of 2016, but you cleared that very easily here. Last trade at 69.16. Going out to the monthlies here, I'll give you a number. 70.35. That was your high back in November of 2015. We're only a buck away from that. So, I mean, the way these things run, I'd say a target $70 if you want to get ahead of it.
I think so.
Yep. 70.35. That was your November 2015 high.
VF Corp,
there's a lot of brands.
They got some good brands. I never realized that. They got some good Lee, JanSport, North Face, Timberland, Wrangler. They got some.
That's it. Timberland.
They got some good brands.
Nautica.
All the brands you wear, Dennis.
That's it. I wear all this stuff. Man, I should be long this stock. This is all the stuff I wear. Actually, I don't even know what brands of clothes I wear. Like I said, my wife does my clothes shopping, so I don't even know what brands of shows I wear. Probably the no-name brands. Because I'm cheap.
Yeah. Any sympathy plays with this one, or?
Well, there always is Ralph Lauren. So I always think about VF Corp, and PVH is another one. But these apparel retailers the sympathy in these haven't been working that well lately. So Ralph Lauren, and that had a nice day on Friday. So it's already kind of had a pop. So it's like, how much more is it going to have? PVH also had a pretty good day on Friday there. So you wonder how much it's going to have too. But look at these charts. I mean, PVH, look at this one, Joel. This stock here, PVH, is only 10 points off its all-time high here too. So, where this stock back in 2015 actually got down to $64, now $128. I mean, now it's starting to get like, okay, well, these are lofty almost. Ralph Lauren, okay, so PVH and VF Corp only 10 points off their high. Ralph Lauren, though, is significantly off its high. So maybe their brand isn't as strong as it used to be. $90. And its all-time high, Ralph Lauren, is way up at $192?
$192.03.
Yeah, $192. So it's 50% off its all-time high. Big difference. But those are the three stocks. When I used to do a lot of pairs trading, Ralph Lauren, PVH, and VFC all kind of do trend together usually. Although obviously not Ralph Lauren as of late.
Yeah, I mean, that brand, the little polo brand, I think is, you're going to have to get rid of that.
Not as strong as it used to be.
You're going to have to get rid of that pink one you have, Dennis, and trade that away.
All right. And John Dodson talking about Macy's. And Macy's actually was showing some life on Friday. We were talking. Some of these retailers had a really good day on Friday. So, where some of their stocks, were wishy-washy and some weak. I tell you, the retailers were strong. And Macy's, Kohl's had a nice pop-up. You can go over and look at what other one is looking at. L Brands had a good day on Friday. That's up at now 43.75 and come a long ways back from the low. That's obviously Victoria's Secret. So, yeah, I don't know. These retailers are showing some life here again.
Let's take a look at the L Brands chart here. I always like to check the pre-market. Oh, there's an odd lot probably ticked at 44. But look at your dailies here in LB, and you'll see a lot of highs here at 44. Starting with Friday's high at 43.94, and then you threw a bunch in there just under that level earlier in the month. You kissed it again, 43.99, August 8th high. Put L Brands over 44. This thing looks like it has some room to go on the upside. And also kind of like a Harlan Pine chart, maybe you had a rally up, you pulled back, you fill the gap, a little consolidation, but 44 to 46 L Brands. I really like that $44 resistance level if in fact it can clear it today.
Yeah, that capitulation low back in August off of, I believe, the earnings report when the stock gapped down from like $38 down to 35. And it's kind of just been slow, steady climbing up since. Kind of ticked off at myself because on that pullback in September, I bought that pullback and I was like, I like this. I want to hold this. Scalper blood in me. And I sold out for like a point. And that was just terrible, because I was like saying to myself, it was a day trade. sometimes, the best thing is like when you get a day trade and you hold on to it and it becomes a swing trade because it's going in your favor and you can hold on to it. And it was a day trade that I went in it for. And then I'm like, it was moving in my favor. I'm like, you know what? This thing's starting to look good. I think Goldman gave it some love. And it was like, I'm like, I want to hold this. I want to hold this. And I had it in my day trading portfolio, which was one problem. So I'm looking at it too much. And then I got up a point and I was like, it's a pretty good trade. I made like a point in it just basically in like 15, 20 minutes. And I was like, it's almost too much too fast. And that day it ran another 2 points. So, and then it's just basically been straight up ever since. I mean, it's had some consolidation here in October, but obviously I think I bought it at 37.10, which is like, I missed that low by like 30 or 40 cents. So I was very close to that low. And I sold in maybe at 38, somewhere around there. And then it was 40 that day. And then it was 41 the next day. And then I was kicking myself. So, so many people let day trades become swing trades or longer term investments because they're moving against them. But I'll tell you, my best trades when I have a day trade or a short term trade that is moving for me because I'm very risk adverse. So usually I cut those losers. Unless it starts in my investment portfolio, that's a different story. But anything that's in my day trading portfolio, I have almost zero risk tolerance for. When I start getting red in it, I don't want it anymore. And people say, you cut your losers that fast? Tell you, that's how I stay in business in 17 years is cutting losers. So in my day trading portfolio, if I've got a thesis and I think, this stock is going for me, you got to give it a little wiggle room in the, its decimals. You may have to give it a little bit, but I don't want to give a stock more than, 0.2%, because then you start to get under. It depends the stock you're trading too. Obviously, you're trading something wild, you maybe have to give it a little bit more room. But on a stock like General Electric, I don't usually give it more than a nickel. Just because, and normal days, and like right now, GE is going to be wild, but you got to cut those losers as fast as you can because that's how you stay in business.
Yeah, that's a contrarian trade that, on it must have been September 22nd you bought it because that day, 36.80. The only thing is, did you ever think, wow, the open was 37.02. We made it 36.80 low. Maybe I'll wait to see if it goes red on the session. If you would have waited for that, then you would have no problem holding it. Or maybe even if you looked at it at 37 or 38 and change, maybe look for 50,
My problem was it went up $1 in my favor if you could get the intraday from that day. It went up $1 in my favor in like 15 minutes. Right. So I was like, I just made a point in like 15 minutes. I think, you'd never look a gift horse in the mouth. I mean, how quickly you make $1 on a retail stock in 15 minutes. And I don't even think there was that much news that day. There was a positive, I think, comment from Goldman that was driving it though. So some positive commentary, but I don't even think there was analyst action. And then some of the other retailers started getting love. And we can find these days where one couple of retailers get some love, they almost all follow suit. So if you can, see a couple of retailers getting, a little bit of love early, sometimes that continues. But, the retailer's been hated for a while and they're starting to show some life here. L Brands, I think, just got to a level where it was just too low. It was yielding over 6% down there. I think it was like 6.5%. And, maybe just overdone, at least in the short term.
All right, 828 here. S&P's just hanging out up $1.50, 5.25 point range. All-time high from Friday, 25.74.
All right, jumping back into the earnings parade here. We really went on a tangent there. We got a couple other ones. Let's go T-Mobile, TMUS, because that's trading up 89 cents in the pre-market. What they report, Spencer?
T-Mobile reporting Q3 EPS 63 cents versus 46 cents, sales of 10.02 versus $10.01 billion. So slight beat on the sales, big beat on the EPS. They're also raising their EBITDA guidance for the fiscal year. And they that was it. That was so good beat.
Stock up 89 cents. They're still trying to do that merger with Sprint, and I think it's getting delayed a little bit here. They said, I think, last week. But stock trading up here. This is just so thick. So this is a stock that, if you look at this chart for the last 3 months, I mean, really, we've been in a 4-point range, and it just looks thick, Joel, everywhere.
It's all about $62 in this one. I was taking off that report. You might even be above that level. Thursday's high, 61.97. Friday's high, 61.98. A couple highs above 62 going back late September, early October. But to me, the thing's clear, $62. You got a nice breakout. Coming back on the downside, you are trading green by 89 cents. So if you're shorting it, you get a look at the close, 60.46. That was near the low of the day at 60.28. So there's really anything under 60.50. I look at support. here, but this 62 is sticking out to me on the upside.
I mean, those last 2 days ranges are identical.
Identical. There you go.
61.97, 60.31 low, 60.28 low, 61.98 high. Within a penny on the highs and within 3 cents on the lows. That's crazy. So if you look at that, we're right in the middle of it right now. So you're right, Joel. Resistance very well defined at 62. Support very well defined at 60.30. So sometimes you see these pesky ranges stick around for a while. So I think, when you're in the middle, I'm sitting on my hands, but when I'm getting upwards of that 62, I'm leaning to selling it. When it's getting down to that 60.30, I'm leaning to buy it.
That's just institutions. Yeah, institutions squaring off ahead of the report, right? Hey, I got to lighten up on the long a little bit. Hey, I don't want to be too short a little bit. So you see that a lot of times, unless someone, has the report in their back pocket and they're in there, the day before buying or selling like crazy. But that's characteristic. Low of the recent dip here. And T-Mobile, if it really starts to go into reverse, 59.42. That was your October 11th low.
Okay, jump over here to imbalances. I just got a couple interesting ones here. So GE, significant sell imbalance, 223,000 shares. It's still trading down 33 cents here. But one that's just off the radar, was there any news on Abbott Labs? ABT is 110,000 to sell. That's an enormous sell imbalance for Abbott Labs. And the stock is trading. It just traded down to 55.40. I'm not sure. Maybe somebody got excited and hit the bid because they saw the 100,000 share sell imbalance. It's already just traded an odd lot back up to 56. But what are your thoughts here? Spencer, was there any news on Abbott Labs first?
No, I have not seen any news.
So somebody just got excited and hit the 55.40 because they saw the 100,000 seller. I had to go look at the book and see if this seller's in the book, because sometimes it'll be a market order, sometimes it'll be a limit order. If I'm looking at the book, ABT, I do see it. 54.95 is where somebody is sitting 60,000 shares. So, and then they're sitting another 34 at 55.95. It's nice to be able to go to the book and you can actually see what the order is. So somebody is significantly selling, off the open. If that order stays, and sometimes, it can be a mistake, sometimes they pull it before the open, obviously if it's not a mistake, it can actually be layering, but you don't see, usually any layering anymore because they've cracked down on it so much and it would be such an obvious example. So usually these orders are real, just a matter of whether, sometimes, an institutional say, oh, sell me 60,000 and they meant 56.95. And they put 54.95, and then they'll catch it before the open because this order doesn't become active until 9:30. So sometimes maybe somebody will catch that as well. But as of right now, there looks like the significant seller here at 54.95 for 60,000 shares. That stock's going to open down if that order stays.
And it'll be opening right into its 3-day low at 54.92. I mean, it's just had a great run. It's I think it's not all-time high. I know this thing spun off. Yeah, all-time high. So let's just give me out 60, 70,000. Sell it down to 55. That's my order. I want out. Boom, they're done and they move on. They could, that's their target. They waited to get above the target. They hit it with size on the open. 3-day low, 54.92. And if in fact you get through there, Dennis, tell the specialists if they want to go to the market that you will take all their stock at 54.50. Yeah,
that's the way they did it back in the day.
That is exactly. Look at that triple bottom at the 54.50 area.
Like I said, Abbott Labs is one of my best stocks. I've had this for the last 5 years. I got AbbVie out of it. It's been an unbelievable performer. It's up near all-time highs. AbbVie is obviously near all-time highs. These two stocks have been monsters for me in my portfolio because my portfolio is more conservative. So when you get these stocks, growing like crazy or going, these are two of my best performers, obviously, over the last 5 years. I don't know what that order is all about, but that's the order that's holding the stock down this morning. If I go to other imbalances here, like I said, GE's 227,000 sell. Pfizer, 74,000 to sell here. So maybe there's a little theme going on in the drugs. Although I don't see that many others. One stock we should talk about before Sean gets on here is Celgene. Celgene got absolutely annihilated on Friday. Went all the way down to $120.80. Bounced up a little bit here. On Fast Money, they were all loving it. It actually was lifting after hours on Friday night because they were all giving it some love. I still own this in my investment portfolio. I think it's overdone here too, but I'm always scared of the 2-day moves. So I'm not jumping in here buying more. Just sometimes you get a little bit of follow through, but I'm interested in possibly buying more Celgene.
Boy, oh boy. I don't know where you're going to buy it. Maybe.
That's a problem. You're looking, you're like, I see 113.63. That's a hell of a lot lower though.
Oh, you don't want 113s. I mean, I think you could find a little bit of support in here. Under 120. This is just just from a shorter term perspective, 3 lows in a row from 119.12 to 119.26. So I'd look at that, and then 117.75 is the other low. But you got to respect a triple bottom back from June at that lower 119 handle.
All right, we're going to bring Sean on the hopper. So
Nice.
Sean Udall is the CIO of Quantum Trading Strategies. You can find him on Twitter at Udall Tech Strat.
Good morning.
Good morning, Sean. How's it going?
Good.
Good.
I got you, Mr. Udall. How you doing here on this Monday morning?
I'm fine. In fact, I'm seeing some pretty interesting news this morning.
Okay.
What are you seeing? What do you got?
Well, BroadSoft gets taken out by Cisco. This deal's been kind of a long time coming, but in a ton, I mean, just a ton of like software initiations, names I've liked for quite a few multiples of percentage points now getting recognized. It kind of echoes what we talked about last time. As price rises, analyst price targets rise, but more often just fact their ratings rise. They go from neutrals to buys, after a stock's gone up a lot. So like Tableau Software, Mule, ServiceNow. I mean, I think I counted like 8 to 10 software initiations this morning. So, we'll see. We'll see if the animal spirits kind of go full flower for the last quarter of the year.
Thinking mergers and acquisitions here, right? With this BroadSoft takeover, and you said Cisco did it, huh? So that's
yeah. Well, I mean, this is a name I could have pegged to get bought out in 14 or 15, and the deal finally happens. Nice company. I've been in the name numerous times. I don't think there's much premium, but the name. This is kind of like one of the least surprising M&A deals in a long time. I think this has been well telegraphed, and so I think the premium had kind of already been baked in. But yeah, I mean, there's lots of stuff. So I think I've written several pieces of this for my subs over the last couple of years about. I think I've calculated there's roughly $1.5 trillion in market cap of large tech companies that don't really have much growth. So Cisco's one of them, IBM's one of them, Microsoft, Intel. There's a pretty long list of names that have a ton of market cap, a lot of cash, a lot of liquidity, and a lot of stock currency value that really don't have any growth. And some of these stocks have really performed really well, even though the growth is low. But at some point, they need to buy the growth to sort of justify where their stock prices are. And probably the most surprising thing, actually, this whole year is how quiet M&A has been, specifically M&A in technology. But there hasn't been a ton of M&A in biotech. I mean, there hasn't been. I mean, I'm surprised that the big energy companies aren't buying assets left and right with stock prices super low and oil at 50. So we can go on and on about that. But yeah. M&A activity has actually been pretty light this year, especially given how cheap the targets are and how rich the companies with the stock currency and the big coffers to buy are.
And you mentioned Cisco, IBM, Intel, Microsoft. Were those some of the big cap companies you said that had the muted growth? Did I miss anybody from that list?
No, I mean there's more of them too. I mean, you could throw SAP in there. You could throw. I mean, there's a bunch, but yeah, those are sort of the prime targets that at some point probably have to buy growth. I mean, Intel did do one deal. They bought Mobileye, but Mobileye is a small revenue thing, so that might change the narrative a little bit for Intel, but it doesn't actually infuse much growth because they're not really buying much revenue. So. And there's, like I said, there's lots of companies trading very cheaply, and there's lots of companies, probably the company with the most stock currency that could do the most buyouts that again, hasn't really done much is Microsoft.
I was going to say that.
And that's a stock that I would say has performed way, way better than sort of has been justified. But, if there's somebody who could at any point in time just decide to do, 15 or 25 or 40 billion or $60 billion in M&A. Microsoft could do it in a heartbeat. By the way, Oracle is another name, just in the exact same situation. They have very, very minimal growth, quite a bit of stock currency. They've done a few more deals, and they're more consistent with the deals they do. But I don't know if they've done a deal this year. They closed NetSuite. I can't think of anybody else that Oracle's bought this year. Then again, I mean, I can think of years where Oracle's bought out 3 or 4 companies in a year. And again, unless I'm missing one, I think the only thing they've closed out this year is NetSuite. And I think that was in the works a year ago or more.
And Microsoft did buy LinkedIn. Did that deal make any sense to you?
No. In fact, I think that's a very typical kind of Microsoft deal that they've historically done. They kind of buy what they shouldn't buy. And that doesn't really change the company much. So I put it this way. The best way I could think about LinkedIn, and we may have talked about this once, like a long time ago around the deal time, but it's not the worst deal they've done. So it's a lot better deal than probably, I don't know, 3/4 of the really terrible deals they've done. But I can rattle off 5 names they should have bought well ahead. Or,
give us some of those names
that,
I know you like to look at these things based on their book value, their earnings, their seasonal patterns. So if some of these big boys are going to go after somebody, give us 3 or 4 targets.
Well, okay. So for Microsoft specifically, because of how their business is structured and where they probably should go, Microsoft in 3 deals could be a leading security company, and in 1 or 2 deals they could be a leading data analytics company, meaning big data storage, AI. And again, if you talk to Microsoft, they would say, "Oh, well, hey, we're great at database and we're great at AI." Well, they're not really. They have really old database products that are kind of crappy. They have old AI products that are kind of, again, they sell because people kind of have to buy, or if people don't really have anything else besides Microsoft in-house, they'll use an inferior Microsoft product. But like SQL Server is nothing like Splunk. SQL Server is nothing like New Relic. SQL Server is nothing like Varonis. So, all the really good AI and big data software companies have just vastly superior products than Microsoft does. And yet, why has Microsoft not bought Splunk? I mean, I could see if Splunk was trading at crazy kind of 99 multiples, that it would be smart for Microsoft not to buy Splunk. But Splunk has been sitting here for 3 years at again, a discount multiple to their growth rate. So there's just one good example. A Tableau software that was upgraded today, by the way, Splunk and Tableau. A Tableau. Now, again, I think I was harping on this one. Tableau was sitting there for about 3/4 trading between, $40 and $50. And I even said, you've got about 3/4 to probably steal Tableau before the company kind of starts growing on their own better again. And so Tableau's, $70 to $80 now. And what's going to happen? Now there might be M&A interest now that the stock's doubled. But yeah, I mean, Tableau, if Microsoft would have just said, "Hey, let's buy Tableau and Splunk and Varonis," that would have been a way, way better use of the money. And that might have been cheaper than just buying LinkedIn itself.
What about Rob Hood Rob Hood wants your observations on ZEN. Do you have do any research on that stock?
Say that again. What?
ZEN. Zendesk.
I don't think Zendesk. Yeah, no. In fact, I've traded Zendesk. That's only a small, kind of a mid cap company, $3 billion. Doesn't have a bad chart here. It's not a steal like it was. Again, they were sitting at $20 for a good year, or off and on. I don't mind the same. This is one I'm sort of mixed about coming into the current quarter, though. But yeah, long term, it'd be a very good asset, good strategic asset. Again, at least you're getting a decent multiple of revenue for the price. So yeah, that's a fine name. I wouldn't put it as one of my favorites because I like companies that I think where their total addressable market, their TAM, is way, way larger than where they are.
That's a new term, Sean. Sean, that's a new term. TAM?
Yeah, total addressable market, TAM. It's not a new term for the old axes that analyze companies. But yeah, I mean, for maybe a lot of people it is. But yeah, I like companies that have massive total addressable market, so they could get way, way bigger. Zendesk, they have a combination of two things, which was why I don't like them as much as, like, say, Splunk. But I do like Zendesk. They have a big market, and there's plenty of things they can go after, and they're a good competitor. But something like a Splunk just has just a way bigger TAM, and they have a very small part of that TAM that they're penetrating right now. So, and again, if you kind of just get back, like, if you combine Microsoft's muscle with Splunk's technology, and then you take that combined power and go after that total addressable market, in theory, if done right, Splunk could become a 3 times bigger company or faster than it could on its own, right? With the Microsoft muscle behind it. So, it's the same thing. Here's another one. If Intel were to buy Ambarella, so everybody talks about, AI, like the whole, how hot NVIDIA's been, all this kind of stuff. Well, I mean, again, there's a couple chip companies out there Intel didn't buy or hasn't bought, or what, probably will never, by the way. But Ambarella actually has a very large TAM, and they haven't penetrated very much of it yet. And the market cap's low, and it's a smaller company, and they have a hard time, putting nearly as much money in R&D and stuff as they probably could. And all of a sudden, if they had Intel's R&D budget, and you combine Ambarella's leadership in a particular space, and then all the other things they could go after, that'd be a whopper of a deal. And Ambarella, by the way, is starting working. I mean, that's a stock chart that's turned, still relatively cheap, but it's turned pretty good off of the lows. But that's a good example of a deal that should have probably already been done. But my guess would be if Ambarella gets to 65 or 70 on their own, you'll have 5 more companies that are more interested in Ambarella than they were at 45.
Why is that? Why is it? And I agree with you, Sean. I agree with you. I'm just saying,
it's because
it seems
corporate
weird.
Buyers are just as dumb as the the dumbest momentum buyers.
They like the chart.
They do. They don't recognize something until it's hitting them across the face with a 2x4.
So they got to have the whole market price in and say, hey, this company looks pretty good, and starts going up, and they're like, yeah, maybe we should buy that company. They can't get these ideas. Because you think logically, though, they should be buying when they're going down. Like, if the stock's down to $40, give them a $50 takeover price. Now you're going to pay.
I worked or at least assisted in the corporate M&A department for a couple companies. So I'll tell you, if people think CEOs are great stock market tacticians, they're wrong. And if people think CEOs are some super geniuses that know more than 98% of the rest of us, well, guess what? They're wrong. So a CEO can be just as bad of a stock trader and just as bad of a market timer as any doctor or lawyer out there, right? No offense to doctors or lawyers, but the old joke is that, doctors and lawyers are usually the worst people that, when they want to buy stocks, it's usually the time to sell them. And then when they're calling up and saying, sell all my stocks, I got this hot real estate deal, right? It's time to buy stocks and sell all your real estate. So, and again, there's exceptions. One of the greatest personal traders I know is a radiologist, a good friend of mine. But he's the exception to the rule. Just like, hey, there are some CEOs who are good at buying back stock with their own company stock, but there's not very many of them. Warren Buffett's great at buying stocks of other companies, and he's great at doing share buybacks for Berkshire Hathaway. He's one of 1,000 who's good at it.
They all buy at the high. IBM did it, GE did it. They all seem to buy when the stock's too high.
Look at how much money HP spent on buybacks before Meg Whitman came to the company.
Yeah.
Yep.
Sean, let's jump over here to some of the big guns that are right there making new all-time highs. NVIDIA has been struggling here. It's trying to fight its way over 200. It got up to $199.59 on Friday. It's going to see $200 today.
It could. In fact, I'm kind of hoping NVIDIA sees my next short area on NVIDIA.
Oh, hoping it. You like it from the short side?
Yeah. I've only played it short all year long. So I'm at this point. I'm hoping it goes to like 204 to 210. I think it sets up an excellent short. They run it over 200. They pull the last of the dumb buyers in. And then they can, they can take it down if they want. Now, could NVIDIA have a big quarter and could the number go up on earnings and stuff? It could. But who reported last? Okay, Goldman Sachs, great report, stock lower.
Yeah.
Netflix actually had a great report, stock lower.
It did.
Yeah.
Just expectations are too high. I mean, even this morning, if you want to go in and just look at Hasbro had a pretty good report. It's lower. I mean, you can look at, this we've been talking about this theme here for the last 2 weeks, really, in earnings. I mean, Costco, if you want to go a completely different sector, that was actually from last quarter, but, they had a pretty decent numbers there too, and they absolutely annihilated the stock. So there has been some stocks that have reported pretty good quarters, but if they've been running up ahead of the quarter, those expectations are so high, they're not meeting those exceeded expectations.
That would, I always try to have a couple themes for the quarter. That's one of my themes for the quarter. So my theme for the quarter is the hot, mega cap, uber hot, uber loved, extended stocks. All probably, and by the way, do I think that there are any big misses? No, I actually think this is going to be a whopper of a quarter for earnings. In fact, I think this is kind of, we might have talked about this like 9 months ago, where I said, hey, I think earnings will strengthen as the year moves on this year. And so I think the last 2 quarters of this year will have even better earnings. But so the other side of this is look at Seagate. Seagate's been beaten up. Okay, guess what? Pretty good quarter. Stocks up nicely. I was just going to mention IBM. So the theme of this quarter is NVIDIA, FANG, the ones Netflix, Costco, blah, blah, blah. Anything that's, by the way, Domino's Pizza was like that last quarter. I'm almost positive. If you can pull up Domino's Pizza, you could confirm that. Yep. Okay, there you go. So that's another great example. So anything that's super hot, super loved, everybody in the world already owns it. Is now, does that mean every single one? No, there's going to be an exception probably here and there, but I think 95% of these companies are going to report and go down, and maybe spike and then report and go down. And then I think there's a lot of room. I mean, again, looking at Splunk, looking at MuleSoft. I mean, there's some smart analysts out there, and some of these upgrades are actually look pretty well timed to me. By the way, like they upgrading data, upgrading Splunk, upgrading Mule. There were some Nutanix upgrades a couple weeks ago. When the stock was pretty cheap, and guess what? Those guys are probably going to report really good too. And I'll admit I've kind of been wrong on the rotation. I really thought we were going to see a whopper of a rotation like midway through the year. Haven't seen it yet. So maybe this is the quarter we kind of start seeing some of that. Seagate up, NVIDIA down. MuleSoft up, Netflix down. Again, on and on and on with the names, but. Yeah, that's kind of one of my themes for the quarter. So I'll be surprised when I see, a hot stock. By the way, CMG. Okay, how hated and beaten up is CMG? I wouldn't be a bit surprised if CMG has a decent quarter and the stock goes up a lot. There's a great example of it.
We just started talking about that too. That 300 level is like the Rock of Gibraltar down there. It got downgraded multiple times and really never could really get under it. And it's starting to show some life. And it actually had some negative commentary last week. An analyst came out and I went on the show and said I'd be buying that pullback when it got down to the 316, 317 area. And it's right back. That's right. Back up here 325 again. I mean, it's all about kind of identifying, when that shift is turned, and then you get an analyst that go counter to that shift, and that's your opportunity to strike.
That's right.
And that's and that's the shift has happened. I mean, we're starting to see, like you said, some of your leaders starting to lag, and the laggards are definitely starting to become leaders. Retail's starting to turn around. Right. Like we've seen some retail stocks as of late.
I was going to mention, so we a funny name is Dick's, okay, because we could make lots of fun about the name Dick's, but Dick's Sporting Goods. Well, but hey, we won't go into the vernaculars of the jokes, right? But here is the thing, okay. A stock I loved like 18 months ago, Best Buy. Everybody hated Amazon was going to kill Best Buy. Nobody buys anything at Best Buy. Everybody buys stuff at Best Buy online. Well, okay, look at Best Buy stock. My next Best Buy is Dick's Sporting Goods. They and by the way, this is an easy call. They have a monopoly. So somebody smart with a huge pool of money is. I mean, by the way, this is only $2.9 billion market cap company right now.
Wow.
I can guarantee you, if Dick's real estate holdings, even if Dick's has a lot of leaseholds with a lot of their locations, they own a lot of that real estate in various ways. So they either own all the improvements, or they own some of the locations. So I would be shocked if Dick's real estate value isn't double the current market cap. And if I'm wrong about that, the company will turn around and they'll grow in some other way anyway. But they have a monopoly. There's no other sporting goods retailers that are alive that are publicly traded. Maybe Big Five is still alive and still publicly traded, but everybody else is gone. So now I can't tell you when Dick's is going to work, though. It could be this next quarter or two they turn hard, and results start getting better, or maybe
Sean, we got about a minute left.
That's a great name.
Sean, we got a minute left.
Wait,
here.
what name do you say though?
Dick's.
Dick's Sporting Goods.
Oh yeah, Dick's. You're still sticking with Dick's.
Twitter. Give us your Twitter update. Hanging out here at $18. Report on the 26th. What do you think for Twitter?
I would say Twitter kind of fits in with the theme that we were talking about. Again, you could make an argument that Twitter probably should already be 4 or 5 points higher on the strength of recent results. I really think the last 2 quarters, the 3 quarters, have been better than the stocks reflected. But again, nobody really cares about it. Facebook keeps going up. The FANG names keep going up. I mean, to make stocks go up, as you guys know, there's the money flow, funds flow have to move to the shares. So no matter if there's a fundamental improvement or not, if the mindset and the psychology hasn't changed yet in a material way, the stock doesn't turn. So I think Twitter's fundamentals have already started turning, but the money hasn't started flowing to Twitter from a stock perspective yet.
Sean, we gotta wrap up here. We are at 8:57 here. Sean Udall, CIO of Quantum Trading Strategies, one of the best fundamental / technical / gut traders you'll find out there. Thanks a lot, Sean. We'll talk to you again. Guys. All right. Thank you.
Thanks, Sean.
We get going with him. It's kind of hard to stop.
He's good, man. I love having Sean on because he'll tell, and the one thing good about Sean, there is so many people out here and analysts and, even people who come on our show, people come on CNBC, and they all just chase price. And the hottest stocks, and even Kramer is guilty of this lately. Kramer used to make a lot of contrarian calls on Mad Money. And now it's all momentum plays. He loves IBM now because it's moving up. And, maybe that's just the way this market has been. It's been all momentum and the ball starts going in one direction. That's how you got to play it. So maybe it's that adjustment. But I'll tell you, Sean Udall makes contrarian calls. And, whether he's right, or wrong, at least he's making a gutsy call. He's not going along with the herd, where there's so many traders and out there, and even the guys on fast money. For the most part, you can guess, like when they mention a stock, whether they're going to be bullish or bearish. If the trend is up, they're going to be bullish. If the trend is down, they're going to be bearish, and they're all scared to go against that grain. And there will be a market again that contrarians will be able to trade, but it's been a difficult market for contrarians. So I give Sean a lot of props for making contrarian calls.
He has fundamental beliefs on where the stock should be, value, based on the
in the long run, that holds.
Yeah,
in the long run, if you can hold long enough, and especially on the long side, if you're not in margin, you can hold forever. I mean, if you're not in margin, and if you really believe, that there's a value that's, to be derived from this, think about, who are really are deep value investor, Tim Melvin. I mean, think about his holding period, and if you don't get into margin, you can hold, and you're on the long side too. Obviously, on the short side, you can get into trouble because stocks can stay irrational much longer. You can stay solvent. Well, you can stay solvent a long time if you're not in margin and you're on the long side. You can stay solvent forever. So until the stocks go to zero on you. But if you really believe that there's a fundamental mispricing in a stock, I mean, Tim Melvin will hold stocks for a decade for that, and I think Sean will hold stocks a long time too. He's obviously focused more on tech stocks, and Tim Melvin's in the financial sector, but the long-term investors still can make money in this market. Everybody just keeps saying, it's a trading market and you got to get in and out, take the gains while you got them. But I'll tell you, in the long run, still, valuation still matters. And, you don't know when it's going to turn for certain stocks, but in the long run, it's what really matters is what you make.
All right. Any changes in imbalances?
You know what? They've grown. There is some outliers, like I was saying. Like GE is now 304,000 to sell. I see Verizon now 78,000 to sell. Abbott Labs, the seller's still there, 110,000 to sell on Abbott Labs. That's definitely an outlier. Exxon Mobil, I see a sell imbalance over there of 110,000 shares, which is significant. US Steel, 54,000 to sell. They're to the sell side. It's actually very surprising to me that the S&Ps aren't starting to leak a little bit, because there is some significant sell imbalances out there. Now, there's not every stock, though, so there is some buy imbalances too. But I look like Johnson Johnson, 43,000 to sell. Wells Fargo, 77,000 to sell here. Morgan Stanley's got a buy and balance of 27,000 shares. Some of your banks are actually up here this morning. General Motors, 29,000 to sell. Let's go grab Snap. It's always an interesting one. SNAP, only 10,000 to sell. Snap is small here this morning. So, they're mixed a little bit, but definitely more skewed to the sell side here. G is now 466,000 to sell. I actually might look at that one, and I might be buying into that imbalance at the open. We'll see. So if it opens too low, because right now it just went from 300,000 to 466, and G just fell another nickel, because whoa, people are like, it hits more filters there, and obviously people see that thing growing, so they're coming in here selling shoes on. But I think you had the capitulation out. I think you've got a couple institutions that are saying, okay, we want out here this morning. It's kind of like another little capitulation here. So I don't know. I still think GE could see settlement. I know you said that in the pre-market, Joe. We're now 40 cents down from that, but I think it capitulated out on Friday.
All right, S&P's pre-market high 77.25, only 3 ticks away from that. Pre-market low 72 even, so no downside till we get through that. Spencer, what's on the docket for Tuesday?
On the docket for Tuesday is one of the same guys we have on the docket every Tuesday. Nick Shaheen, of course, the author of Create Income with Option Spreads. He's our options guru, and he's on the docket for tomorrow. As far as our show from today, if you missed any part of it or just want to listen to our lovely voices again, you can do so on our podcast on iTunes, SoundCloud, and Stitcher by just searching for Benzinga or Pre-Market Prep on any of those platforms. You can also go to youtube.com/Benzinga TV to watch the show as it aired live. I do want to reiterate my announcement that I made on Friday. Tomorrow, we're going to have a special event in the office. Gene Munster will be in our office. We'll be doing a live Q&A with Gene tomorrow at 11:30, Joel. 11:30 is when Gene will be here. We'll be doing a live Q&A. It'll be streaming on the Pre-Market Prep site, as well as on Benzinga's Facebook and YouTube, YouTube, and Twitter pages. You can pop into our chat during that time and ask him questions, and I will be moderating, and Joe will be the one who is asking Gene the questions that you ask him. So that'll be tomorrow at 11:30 a.m. Eastern Time, our little Ask Gene, as we are calling it. But that is our show for us today. Hope everyone has had a good morning so far. Hope you have a good rest of your day. We'll be back with you on Tuesday.